Hello, ladies and gentlemen. Welcome to another live webinar. My name is Angelo. I am your host, presenter, and friend, mentor, and teacher for trading. Today, guys, we have a very nice subject coming for you. We're taking a look at gold and why to trade gold and how to trade gold and everything relating to gold. I can have an eye on the chat to make sure you guys are seeing this and listening to me and seeing me. Hopefully you do. Shout out in the chat where you're watching from. If you're watching from Asia, from Africa, please let me know in the chat. And let me know what you guys think about the background. We've got a new one today. This is our studio, our office. So yeah, waiting for some feedback on the chat from you guys. Here we go. First one, Javeen. Welcome, Javeen, one of our frequent viewers. And Trading Market, of course, was here from before, writing hello and welcoming. And Javeen from Sri Lanka. Let me know in the chat, guys, where the rest of you are from. I already see that Andre wrote that he's watching from Armenia. We now know that there's Sri Lankan traders watching. So if we have Indians, South Africans, Nigerians, Indonesians, Alexander from Ukraine, welcome, buddy. And yeah. Keep me informed there where you're watching, and if you have any questions relating to the subject today, it is a very good subject, as we will see, especially in the live part, why I think it's interesting for the times we're living in right now. And questions. My moderators are online watching as well, so if you have any questions relating to the webinar or not to the webinar, send them over. The guys in the moderating team will be helping you answering there. And like always, if you do like this video and you find it useful, you find anything useful, please do consider liking the video, subscribing to our channel, ring the notification bell as well. This will really help us make more videos like this on subjects that you want to watch. So, okay, I see lots of more activity on the chat. Watching from Dubai, Saudi Arabia, Angola, United Emirates, Ghana, India. Welcome, guys. Philippines as well, beautiful Philippines. So okay, guys, I'm gonna straight away jump into the presentation because I want to show you guys some things on the live account as well. And here we go, subject page and title of the presentation, why trade gold, with some nice little crown on gold. First thing first, we're going to take a little look at history and the importance of gold that our ancestors had, and why it is such a prized commodity in current times. It was first discovered in the Middle East before 6000 BCE, so that's 8,000 years ago when it was first discovered in the Middle East. Then historic research have proven that humans have a long-standing biological attraction to shiny objects such as gold, which is likely rooted into the primitive desire for water. So the shiny effect of gold is a primitive desire of ours for looking for water. So very interesting study here, this one. And then gold was first traded around 1500 BCE when the Egyptian Empire made the first trade of gold, basically. So we're using it as a commodity of exchange, first international exchange. So that's some very cool stuff that we just learned on history subject. Now, how much gold is out there? This is a good question to understand how much of this valuable asset is around us in the world. So 244,000 metric tons of gold have been discovered to date, 187,000 metric tons historically produced, plus current underground reserves of 57,000 metric tons. Then we can see here as well the 5 top gold producing countries in the world. Australia, South Africa, Russia, USA, Indonesia are the top 5 producing countries. Very important information, I think, to understand a few things more about gold. And okay, now gold is recognized as a safe haven commodity. This is in today modern times when the markets are unstable due to political unrest, market instability, natural disaster or global pandemic or war, 2 of which we have just passed very recently. The Russia-Ukraine situation is still going on, unfortunately. We just came out of the pandemic and the inflation prices are pretty high right now, right? So if you feel that this is a time where quite a few of the things mentioned here is important, then we should pay extra attention, right? We have seen the value of gold rise at an extremely high price when these situations occur. Thank God there's no massive natural disasters currently, but based on how the rest of the list is going here, I would not be surprised. Then, now we're going to take a look at the prices of gold and how it has ranged from 2003 Behind my image, you will see the modern dates of 2021, and the last upper band is the current. So gold reached a peak versus as the USD developed an inflation fear and increased depth. That was in 2011, the economic crisis of 2012, more or less. So gold reached an all-time high, peaked at that time due to the unrest, political unrest, and the stress of the markets, seeing that the inflation in the US was rising to massive, massive heights. Then after that, we can see it kind of dropped a bit. It came down, the value. Let me just get this screen brush on as well. So we saw a drop in price. It's never a steady drop. You can see it's going up and down throughout. Stabilizes. There is a period here from 2013 until 2019, more or less, that the price is stable. But then 2019, we can see a very sharp climb. When you follow it all the way up to the top here, this was the end of the pandemic, more or less, when the pandemic was, let's say, more or less not so feared anymore. The prices did peak over 2,200, I think the peak was. Then we saw it come down. Normal progression would for it be to continue dropping to a more steady level of what we saw here in this zone. That would be a more steady expectation, like a steady drop. But we all know that the last couple of months since the beginning of 2022, we have seen the Russia-Ukraine situation going on. So gold prices again jumped to an all-time high, almost reaching the same peak as before, very similar level. And this is updated. We can show on the live a bit of an update of what happened after this, but it is important to understand and see visually here how gold reacts when the markets are unstable, when there is some kind of tension or reason to panic. So very, very good example we have here for this one. Let me just continuing now, going forward. Now we're going to take a look at the last 10 years for the value of gold, how it has moved in these last 10 years. So looking back from 2012, more or less the beginning here, we can see that the markets have a quite nice curvature where it's staying more or less in this highlighted blue band here. It is highs and lows within this band, peaking at some points, like we said, over 2000. At this point as well, 2012, as mentioned before, the economic crisis, markets, gold started dropping after that when markets stabilized, stayed more or less in the range, in the band here throughout, up and down throughout. The latest ones though, 2019 pandemic, we saw it climbing, 2020, end of the pandemic more or less, the drop, and then the recent months, 2022, beginning of 2022, a second peak, almost as high as the first one here. So very important to understand the movements of gold. If you are planning any trades especially, it's very good to understand this. And we'll see on the live, as I said, we'll see on the live how the markets are reacting. Inflation in the US is getting very high, so we'll take a good look at that one. Here's a 1 year forecast, the last 1 year from July on of last year until July of this year. There was the peak in the beginning of the year, beginning on February, March, when Russia attacked Ukraine. And then we can see the drop down now to a very low point here. Comparing to where it was before. On the live account, we can see it even further, much more clearer, this last drop we see here. But the forecast is that it's going to stay in the range above 1,800. We'll take a look at current market prices of gold, and some might be actually surprised to see it is significantly lower than the forecasted 1,800 for this year. So we are now currently coming close to October, so we should be here. That means that we should be somewhere up there on prices, above 1,800. We'll take a look on the live, but I can tell you we are way under the 1,850, 1,800 under. We're even under this point. We're under 1,700 for gold. So gold is quite cheap right now. So it is something we should definitely consider the value of it, the price of it, and what it is worth. On this one, similarly to before, I've highlighted for you guys the movement on our platform now, on a screenshot from our platform. Reserve Bank in India, alert list, IQ option. Why? Okay, so guys, moderators will be answering questions related to the situation going on with trading in India, and support. Ask support as well if you have such questions. They can definitely help. They're working 24 hours, so there's lots of help and answers can be given for that subject there. Back to our presentation. First, we see in the beginning, leading up to the pandemic, the markets, as we mentioned, were stable, a bit of a climb, a bit of a drop after. But then as the pandemic began to go viral and global, we saw the prices of oil climb. in this massive upward movement till it peaked in 2020. This was more or less when the world settled and lockdowns and restrictions were all lifted, and steadily gold prices started dropping. Then one would expect this, as I mentioned, I would expect this to continue dropping, but then it stabilized. It stabilized on a level more or less at this point. We can see a touch, another couple of touches here. So we can draw a nice support in this range. So from around, where is it? That price there. So I'm going to say there could have been our support drawn in, but an even nicer one is this angled one, because we can see multiple touches. So it was hinting that it could peak up again. And this, of course, came to a point, a boiling point, once we did see the Russian attack, more or less. And we can see a matching price almost on the same level, the all-time highs, above the 2,000 marker. Then as things became more normal, markets moving forward, recession, not recession yet, but the high inflation all over, we saw gold values dropping. As inflation goes on, currencies get stronger, people tend to put money more in currency rather than into gold, and this is this movement we saw here. Bearing in mind, this is 30 days each candle, so this is 1 month each one of them, right? So we have a quite long stint here. This is 7 months of constant dropping in the value, and look at where the price is. This screenshot I made it today for you guys. So we're just hovering above the 1,600, 1,650 more or less is where the gold price is sitting right now. So I would think that is undervalued based on the charts we saw before. Gold is undervalued, and there might be reasons for us to be concerned about this, and maybe even to consider putting some money into some trades in gold if things do progress the way they have been progressing. Now, we're going to take some brief little examples now on why trading gold on our platform is advantageous for us. So take advantage of which direction the price will go, up or down. When trading on IQ option, you don't buy it, you don't own the gold, so you're not limited to one direction. You can trade against the value of gold if you want. So as mentioned, it can go in either side. So take advantage of the direction the price will go. You can do a minimum trade of $1 on gold, then control your trading, taking advantage of take profit stop loss. Leverage is high, so high risk, high reward with high leverage that we offer on trading on gold. And then competitive spreads is another reason why it's a good idea to possibly consider a trade on your account with us. And then, of course, VIP is something, again, every trade you place can build your account closer and closer to getting the VIP upgrade, which will hopefully give you guys extra advantages and benefits by being a VIP trader. Account manager, faster withdrawals, training sessions, loads and loads of things that can help you guys there. All right, now, my favorite part, we're going to take a look at the live and show you guys some things I've been highlighting here on value of gold. First thing first, we're looking at the previous slide here as well. So we can see the movements of gold, how it climbed rapidly, and up to this high point. There is the support, the resistance, I would actually say on the top here, can draw a resistance at point out there. An all-time peak on the wicks is maybe a very, very optimistic resistance. Supports, this is clearly a support that has more or less been broken, although the wick has touched it. Bearing in mind, guys, this is 30 days, so we're looking at something for a very, very long-term trade if this is what you're considering, a super long trade. Leverage in gold is 50x currently. Do you request to increase high leverage? Well, leverage, it depends on the assets and the market spreads and conditions, right? So 1 to 50 means that for every 1 you put down, you need to put 1 for every 50. So if you're doing a $50 trade on gold, you only require to use $1 of your balance, or to have $1 on your account to place that $50 trade in. So if you're doing a $500 trade, you only need to have $10 on your account to place that $500 trade. That's how leverage works. So 1 to 50 is not bad. We do have higher, of course, on Forex, but depends on market conditions, depends on our activity of our traders on the platform, that we can increase, hopefully, that leverage for you guys. If you are a VIP, you can also always ask your account manager to check that for you. If not VIP, ask support if they can check in with the leverage and if there are any plans of increasing, or I don't think decreasing, but increasing it possibly. Right, so This was for the long charts, right? The long movements. This big 7-candle drop, 7-month drop in gold value is something alarming and we can consider as worrying, especially if we're going to draw in a Fibonacci perhaps and take some rough estimates from that. Looking at the previous high, low was there, a rebound, came to the same low, rebound up to the same high, came down again. So at this point here is where I would draw my Fibonacci's from the highest point to the lowest point. And if there is to be just a pullback and gold continue dropping, then that would be most likely around the 38. So I would expect to see gold possibly, if there is to be a pullback on these next couple of candles, I would say the next one maybe. So it would, let's say, enter here, could climb 1, 2, maybe touch the 38, and then possibly start dropping back into the direction downwards again if it is to be a downtrend. But there are things that are worrying. Like I said, their inflation in the US is massively high. The US inflation currently is at 8.3. In June, it was at 9.1. That is massively high inflation. Many are saying the word recession flying around a lot. If the GDP of a country is negative 2 times in a row, it is considered as a recession. And that's what's happened in the US. In the summertime, US has entered technically a recession. So now I'm going to show you something interesting here. Let me just bring this first down to 1-day candles. And let's put that on a 3-month or even like lower. Let's do it to a 30-day movement. So something like that. And let me show you some things that I find very interesting now. Do you guys identify any similar patterns or movements here? When we're looking at Australian dollar versus US dollar, bear in mind Australia is one of the countries, the top 5 or gold producing countries, as is Russia, Indonesia, South Africa. So right, gold prices. Where has gold been heading in these last periods? Drop. Steady drop, right? There are some pullback moments in here. We do see gold prices moving around a little bit. So as we can see, a drop, then a pullback, a drop, then a pullback, a drop. Then it went sideways more or less, followed by another drop and now a pullback. So looking at the highs and lows, there's a high, there's a low, lower high, lower low, lower high, lower low, lower high comparing to the other one, and then a lower low. So there's a steady drop in the value of gold. Very similar, Australian dollar, US dollar, drop, pullback, steady drop, and I'll need to see a bit more candle here to consider it a pullback. Euro USD, same kind of thing, right? Drop, pullback, let's say to there. Then this is interesting here. There's a higher high, so this was a low, then it went to a high, low to a higher high. This one here is a bit of a worry thing, like a breakout possibly of the trend, but then it steadily corrected itself by setting a new high, a lower high, then a low, and now it's maybe pushing back. The only one of these 4 that moves differently is the USD JPY, because it's the USD trading against the others, showing the strength of the US dollar right now. This one has more or less the opposite, right? So it's climbing with a little pullback, climbing with a little pullback, and then again climbing a little bit higher over the time. This big candle here is a massive tricky candle because it does look a bit like weird compared to the next ones around it. So this day here was a massive candle, but again, prices are steadying now. USD has stabilized more or less at that price. On the other ones, we see the euro is fighting back against the USD. Gold is pushing back upwards, and Australian dollar has had a nice strong green candle pushing upwards as well. Okay. My moderators are watching the chat, so the last comment here from Uzezi, I'm hoping my moderators are checking into that one, because that's something I don't like seeing. If you did get something, you should be receiving it. A new month is starting right around the corner, so if that is legit, then you should hopefully be getting your prize delivered to you, a bit delayed, but delivered nonetheless. Okay, so back to the markets now, and let's focus on gold, as it is the main subject of our conversation of today. Let's bring it down now more to a closer period, something like for a week, to see if there's anything we can identify in this last week, if there are any movements. Again, very similar to the previous one we saw for the daily candle and the monthly candles. There is a clear down drop. There's the peak. There's the bottom side of it, right? So the movement we saw, peaking up, coming down. Let me just draw that a bit straighter. Down, pulling back up, down again, pulling up, down. This is a beautiful downwards pattern we see here, right? Very clear, very, very easy to understand the breakdowns and the pullbacks. Very similar pattern as we saw on Euro USD as well, and Australian dollar USD. All currencies versus the US dollar are dropping. So gold right now is, let's say, correlated negatively towards the USD. Like many other things are right now as well. So if the inflation in America continues this way, if the American government and the central bank is going to implement some measures, increase the interest rates over there, that would maybe stabilize the USD and the inflation, because inflation can be good for the economy, but it can be very, very bad for the economy as well if overnight, let's say, or in a very close proximity, the prices go up. If, for example, you have to buy some food for your house, and last week you spent $100 on shopping, this week the same shopping will maybe cost $120, $130. Very, very soon that inflation price will get so high where you might be asking yourself, what's going on here? Last month I was buying a loaf of bread for $1, now it's $2. So everything doubles, cost of everything goes up, cost of living goes up, but your salary stayed the same. So government is making money, currency is getting stronger, but the people are suffering. Sooner or later, unrest will form, and then that's the last thing that government wants. They will try to stabilize that inflation, to bring levels down, weaken the dollar in a way by making people save their money and hold on to it by increasing the rates and stabilizing the inflation. So if that is to happen, we could possibly see the price of gold start to climb and hopefully maybe even reach the zone we spoke about before. If you remember on the charts, 1,800 was the minimum range, more or less. 2,000 was the high. So we should be realistically seeing gold somewhere in this proximity in the weeks or months ahead. So for that to happen, we'd have to first get the US announcements to come in, recession to slow down, and then we could steadily, so hopefully see gold prices rising up to get into this zone where it is expected. So timing is very important. This is a 7-day candle frame here, so we're looking at 1 week per candle. If you can bring it in even closer, this is where you can use some different tools. You can use some candlestick patterns, as we have seen on previous webinars together, where you can see clearly this, for example, here it's a bullish engulfing market prices. Now this is a bearish engulfing, sorry, a bullish engulfing. This was a bearish engulfing, bullish engulfing here, market climbs, bearish engulfing again, market drops steadily. Bullish engulfing candle shows the market should climb, and it did start climbing gently. Bullish, bearish engulfing again, market drops. This one here it would be like more like a harami in a way, so we see the market heading sideways through that. Then this one is a clear evening star, green followed by small red, big red, evening star, market drops value. Then again, here is a morning star with these three: big red, small green, big green, morning star. So market climbs. And so far this candle doesn't show us anything on this daily candle, so it's more or less it might even start to form a hammer if this candle here, for example, is to continue climbing and it closes somewhere at this point. So we'll have this body and then a wick underneath it. It will be a red candle, but it will be a hammer, signing the market could climb even further, with the days ahead being that it is Thursday, tomorrow Friday. If that is the case, we might see another candle possibly growing up even further tomorrow. Might be something on that kind of a shape. And then we'll just see it hopefully gently climbing back up to a more realistic price. Now, supports, resistances, let's see if we can find anything on this. And it's a struggle when we have to see so far back. This is the previous low, so let's just go to the graphic tools, take a horizontal, draw in at this price range there. We can see a touch here, a couple of touches. Let's make it white and let's make it bolder and bigger. Okay, so that would be currently our resistance from where the market is now. Supports, we're gonna have to go way back to find a support that is adequate to us. 2020 support, maybe this point here, this peak there, or that one. This peak is a realistic one. So let's click here, duplicate it, drag it down. You guys can always use these tools as well, right? Very useful for understanding where the market prices are. And I can match this previous peak here. Let me just zoom into there. This peak here is what I'm taking as my baseline for my support. Moving it forward, I can see it crosses a couple of candles. Again here, there was a bit of interaction with this support. And coming more to the present, as I'm coming closer and closer in. A couple of touches here on the bottom side. Let me just bring it more. So a couple of touches here, another strong touch, couple of touches very recently in, what is this, June, end of June, peaking up, July that was, so peaking up in August, then dropping way down, touching the lower one down here. This is our support, that's our resistance. I'm keeping the white here, so this would be a nice little zone for us to look out for. But keep in mind what I just mentioned before with the candles, right? Keep an eye on this. There is an evening star. The last pattern we can identify here is this nice evening star pattern in this box here, these three candles. This one is so far looking like it might form into a hammer, meaning that the market could show even more climbing. And an optimistic thought would be that we might see this kind of movement in the days ahead, maybe by, what is this, the 10th? Yeah, 4th, 5th of the month, by next week, there is a possibility it could touch the resistance. So if you are to open a trade here, close it at the 1.8, have a stop loss, take profit at the 1.685, would not be a bad move to go. If we are talking about take profit stop losses, I would say the previous support would be a very, very good exit from it. From where the markets are now, though, it's not a very clear ratio, right? It will be a 1-for-1. Looking at where it is now to go to this movement compared to that movement, it's a 1-to-1 ratio. So I would say halve it. Bring it into here, your stop loss, if you believe a buy trade is where you should go. So you're looking for this movement here, and you're willing to sacrifice it for that movement on the bottom side. So stop loss at this point, 1.630. Take profit at 1.685. This would be a quite nice short 4-5 day trade. By midweek next week, we should hopefully have the outcome, unless something unexpected happens with the market's news coming in the next few days. That would be for what we're looking at on day trading. For about a week trading, I would say, on the prices of gold. It's clear to see we have a strong downtrend that might still be pursuing. So this would be just a pullback we're looking at here. The overall trend based on status quo and where the markets are right now, where the inflations are right now, it still is a downtrend. So this is the inflation movement, the pullback that we're expecting possibly to the previous high. Worrying though, because normally, as you said, it goes high, low, high, low, high, low, then high, low, high. So it should stay under that. So this is a bit ambitious, looking for the pullback to come to the same previous high. So this is a bit of a concern, and it would be a bit of a risk to take that trade, because the overall trend, as we mentioned, should continue in this pattern. Let me just throw one Fibonacci in here as well, and see how we can use that Fibonacci in our advantage as well. So taking the high of the last trend, this would be the moment there, bringing it to this point. The 38.2 would be right on my support line, by my resistance line here. So that would be very, very nice if this market does pull back until the 38.2. If we do see that, we close the trade at a nice position. If we see it break away, let me just zoom it in now to that line so we can get a nice reading of that. So that would be a take profit there at the 185. Realistically and optimistically, if that movement would happen, we'd see it touch. You'd hopefully win that trade. At this point, once you see a candle touching it and closing under, another candle closing underneath it and not touching the previous Fibonacci line, the previous resistance, then you can most likely expect the market to continue dropping based on technical analysis only. So we could hopefully see an opportunity there. Once we do see this candle out opens like this, and it's more or less pointing to us the market could drop, then the drop could be significant. It could be further, even lower than here. Throwing a Fibonacci extension in now, let's just reverse things around. So we would say that there would be, on this current support would be our line, so we just need to reverse it. This there, it is the point, and the 100% there. So 161 will be what we were looking for. So the next stop point, you'd most likely open your trade, as we showed here, somewhere around here. If it touches, after the touch, let's say there, you open your trade at the just under the 180, 1680, and your trade would be looking for a direction more or less like that. You could set a take profit at 161.8, which looks like a realistic next low. From low, let's say the high comes to there, next low could be here to the next high there. This is unless the status quo changes. This is always something that can change. So this is technical analysis based on information we have now available to us. As you guys know, if I take everything away, if I take that away, take my support resistances away, then we're looking at a naked market, right? We have no idea what could realistically happen. Maybe in the news tomorrow something beautiful happens, Russia, Putin pulls out, ends the madness, and we see the markets can stabilize there. If the inflation in America is to change, again, we might see a total reverse. This could be the end of this trend. We might see a new trend starting, an upward trend where it starts showing this way. So we'll have a low, high, low, high, low, high, and just keep on climbing back up until we get into the 1,800s, 1,900s. That would be, again, something very possible. Hey, I think I'm running out of things to say, guys. I think that's more or less covering what I have for the live. Let's go back to the platform, back to the presentation. And we jump straight away to the screen where it shows thank you very much for watching and Q&A. You have any question, guys, relating to gold? If you are planning any trades for gold and you're worried or concerned, now's the time to send a few questions over. Anything else you're wanting to look at? If there's anything else that is related, you saw something on the other charts we saw, the Euro USD perhaps, the Australian dollar USD, just fire in a question on the chat so I can answer those ones. Like always, once again, guys, if you do find this webinar useful, if you find my information useful, please, like always, like, subscribe, click the notification bell to be notified for upcoming webinars. We have tons of webinars planned and coming your way. Next ones we have coming up is on the 6th of October. If you speak Hindi and you are interested in learning a new strategy, then we have a very nice webinar coming up for you. It is a trend strategy for binary options. We're going to do the same webinar a week later. So next Thursday on the 6th of October is the Hindi one. Join, please, if you speak Hindi. 1 week after that, I'll be back with the same subject, same webinar more or less, but English this time, where I'll be showing you guys the strategy with the trending strategy. Can I trade with only $1? Asks Ashib. Of course, yes, easy. You just can definitely trade with $1 on gold. This is commodity trading, gold. Minimum trade here. Okay, we can't do it on the actual commodity itself, but if we go to options, I believe gold is in options as well. All right, so the digital, we should have it, gold, there we go. It's available on digital option for one trade. You can choose the time frame you want, short, long, 1 minute trade, there it is, and then the longer one. And you can trade on digital options on gold if you like. And if you want to do a commodity trade, a longer trade, the minimum amount is $33 to buy one quantity. So 33 margin requirement. You need to have $33 on your account to place a trade of quantity 1 in the direction you believe gold is going, up or down. Answering the question there. And what was I saying about the upcoming webinars as well? Wrong way, this way, yes. So upcoming webinars. Why can't find binary on mobile? Well, Mr. Dukes, might be related to the application you have on your mobile. If it's an Apple or if it's an Android mobile, it could be due to the application. Check the App Store, and you should have multiple options. There's the IQ option X and the other application as well. It could be due to that. If it is an Apple, that's the reason why I think most likely you don't have access to binary. But do check with support as well. I'm sure support have answers for every country, every region might be different. So do check with support, ask them the same question, and they can definitely help. If my moderators have a clearer answer there, they can maybe answer this one as well, relating to trading binary on the mobile phone. And if guys, you can always help as well. If you have information, share it. What the long-term trade for euro? Ooh, nice one. Well, looking at the economic situation between the two, America is in a much higher inflation point than Europe is. They were held back a lot more in the actual not recession, but the market crash, let's say, and the markets dropping value during the pandemic. The USD was the slowest to recover from it. When it did recover, though, it recovered very strongly, and the USD is more or less on fire now, and the inflation is super high. Euro and all the other currencies were a lot slower to react and had much slower gains. Safe and steady wins the day kind of an approach, not pushing it, keeping inflation much more under check and much more in control. Americans are maybe, like we can say, playing it a bit more risky with the high levels of inflation that they're having right now. This could be a two-edged sword, right? If they don't get this thing under control very soon, we could see a bit of a panic, a bit of a recession, and the recovery for the dollar could take much longer after. There could be a massive drop in value of dollar. Euro and all the other currencies will gain significantly. Gold would most likely climb significantly. So if you are an active trader and you're keeping well informed, definitely check market news. Definitely check in the upcoming Friday. We're going to have NFP in America, so definitely keep an eye on that. Interest rates announcements in the US, definitely keep an eye on that. And keep a check on inflation when the next reports of inflation come out, just to see, and hopefully it keeps on dropping. Right, SBP, hi to you too, sir. Right, guys, so what were we? Other webinars. If you do speak Indonesian or Thai, we have webinars on Tuesday on those subjects. The one coming up for Thai next week, Tuesday, on the 4th of October, will be the webinar for Risk Management Advanced Level. So Thai speakers, please watch that webinar if you like. And from Sri Lanka, welcome. And I see my moderators are active here helping. Please contact support. All right, well, Zarel, there you go. That's your answer from my moderators as well. Speak with support regarding that question. I'm sure there's an app that you can download for your phone. Switch the app you have, and that will be the best solution. What else? Traders, new traders, if you're new to trading and this is your first time looking at trading, or you're interested in starting in trading and you don't have an account, in the description below under the video title you will see a link where you can just click on that link and you can go directly to make an account with IQ Option. Absolutely free of charge, very, very easy. You get a practice account. That practice account has $10,000, which is totally replenishable, and you can use it to practice your trading, get to go and experience. We have a ton of videos on our channel already that will help you guys if you're total beginners. Once you feel that you're ready, you get good results on your practice account, you're confident, then simply start depositing into your account, begin trading on the real account, and hopefully great success will come your way. Money management will be something I advise as well for beginners. We have 2 videos on money management. Definitely watch that one, those 2 videos if you're a beginner. They're very important. All traders as well. If you're watching this webinar and you haven't watched our money management one yet, I urge you, that would be my advice to click on next. That's the video I would say watch next. And then let me know on the chat as well. We have the comment session on our videos always open. So if you have suggestions for what you want to see next, indicators, strategies, if there's any specific indicator combination you would like to see, let me know. We're currently working on Bollinger Bands and RSI. It's in the pipeline, so we have a couple of webinars coming your way for those 2 indicators. Fractals is another one I always like using, and I'm going to make a video on that one for you guys soon as well. And we need 1 minute good strategy for option trading. Okay. We do have a couple of videos on that subject already. 1 minute strategy trading. The Bollinger Bands one we have coming up should be dealing with that subject. RSI as well, that's most likely in November, is going to be tackling that. And the upcoming one as well. The upcoming webinar we're going to do, trending strategy for binary option. That is definitely something you can use on short-term trading, binary trading, and digital as well. I see lots and lots of flowers on the screen. Beautiful screen. Wow. Thank you very much, Eleanor, for sharing these lovely flowers over here. I'm blushing. So guys, I think we're going to wrap it up. That covers more or less everything needing covering. Comment underneath anything you have questions about. I will hope to answer some of your questions there. There might or might not be a giveaway on the next webinar coming up in a couple of weeks from now, on the 2 Thursdays away. And I look forward personally to see you guys all there. Let me just bring it back 1 second to the full cam. So show off our lovely setup we have. Comment underneath as well if you've seen previous videos and you like the background we had before, the IQ Option logo, or if you like this one with a nice plant we have. There it is on that side. Let us know what you prefer. Okay, let's see. Oh, a couple more questions. There is a giveaway. Unfortunately, Nasir, there is no giveaway for today's webinar. We're going to hopefully have one ready for you guys next one that's coming up. It will be in the beginning of the month, so we shall hopefully have some nice prizes to give away on that one. Only price action, not indicators. Okay. Nice. So kind of what we just did now, right? BSP, price action, seeing where the market's moving. Nice. We could definitely do something like that. We are planning something like that anyway. Just have a webinar where we're just looking at different assets with your help, what you guys want to see. You guys will write in the comments what asset to check, and we'll just do some price action movements based on that for long term, for short term, bit of everything, right? Cool. If that's what you mean, BSP, please comment below in the comment section so I know that's what you're meaning. So, right, guys, hope you have a lovely day. I hope you enjoyed this webinar, and I definitely hope to see you all back again next time in 2 Thursdays from now when I'll be back. But if you don't want to wait that long and you speak Hindi, watch Urvil's webinar next week. Have a great day. Have a great weekend coming up, guys. All the best. Bye-bye.